So good afternoon and thank you for joining us today for the Cyprium Metals Investor Webinar. Today we're joined by Cyprium Metals Managing Director, Barry Cahill, who'll provide an update on the Nifty Copper project. Barry, I'll hand over to you.
Thanks, Jane. Thanks everyone for attending. Good morning from Perth. We're still in daylight savings, so a long way behind. I've got the presentation up. I'm sort of going to make an assumption that most people know the Cyprium story, so I'll try and go directly to the questions that, the issues about finance and all that sort of stuff, which is, I think most of the questions will come from. But as you know, formed in 2019, got the Nifty Copper asset in 2021, and since then we've done our study. We're in a finance process and basically looking to go to production by next year. Pretty large projects for such a small company. We've now got 1.6 million tonne of copper in resource, and all of our ore bodies are open in some way or another. So we've got this potential to even grow the resource base further. A little bit about us, I won't go into that too much. A little bit about Nifty, just to refresh everyone. So Nifty, as we know, started in 93. We've purchased in 21. What we've done is we've looked at the phase 1 mine life, which is the oxide transitional material. Phase 2 moves into the sulphide, which goes for about 20 years, but initially 6.5 years. And just to touch on when we did that restart study, if you recall, the resource was 730,000 tonnes of copper, and we've done a resource since it's over 900,000. And all appearances, the phase 1 life will go for another 2 years. But the key for us about the restart study and why we haven't officially revisited and put it out in the market is it takes time and money. It resets a few things like your finance process, and the project was robust enough on that restart study for us to proceed with finance. You can see the rest of it, and I'll touch on a few of those points as we go through. So what have we been up to besides smashing away at finance? The team on site's been pretty good, and they've continued to chip away at some of the work that needs to be done, like continue to clean up and clean out the SXEW. We've actually got now about 30 tonne of copper cathode off the cathodes in the SXEW, because as I think I've said before in one of these webinars, it was just turned off. 23 tonne of it, I believe, we've dispatched and sold already. So, that's part of what's happening with the cleanup and that. And then the crew have been focusing on these solution ponds. What we've seen is that they're full of solid, which looks like mud. And I haven't got a photo for this presentation, I'm sorry to say, but when they've taken the bit of mud off the top, it's full of solid copper sulfate, which is great because it's part of the solution inventory that we start with at the front of the mine. So they're cleaning those out, getting those ready to go, working on this SXEW and maintaining all the rest of the assets, the mine village and the airstrip, the offices and all that. If you recall, the plan for which we've got approval now, except for one approval, which I'll go through as well, is we built a new heap leach pad here. We move this material onto a new heap leach pad. We move ore from the open pit with a cutback that runs through here, and we move it onto a new pad that we build once we move this material off. Waste dump out to there, refurbish the SXEW, and of course, right alongside our 21 meg gas power plant plus backup power and our gas pipeline, our sealed strip. So everything there ready to go. Infrastructure value, if you're trying to build this today, because remember we've got a 2.8 million tonne per annum concentrate, it's probably $600 million. So a pretty good pickup, again, for a smallish company like ourselves, but we're making use of that infrastructure as best we can to actually get the project refurbished and going and up to the 25,000 tonne per annum copper cathode mark. A little bit about the history of Nifty, and I just reiterate that 200,000 tonne of copper cathode has been produced from this site already, and 200,000 tonne, and in fact at plant capacity at 25,000. So when we go into our finance process, this is de-risking the project because things have been done there before, things have been sorted out, cathodes been produced. So it makes it a bit simpler in that respect than a greenfield site in terms of our process. And as I said, we oxide open pit, which was stopped prematurely, and then we'll move on to a phase 2, which is into the sulphide portion of the ore body, which is the greater size of the project. A little bit about the infrastructure, which I won't go into, but as well with the power, we've got all the standby as well, which I think is important. Water, everything we've got, the refurb that we've already completed in the camp, the phase 1 refurb and the dry mess refurb. We've got a phase 2 once we start full-on refurbishment. The copper metal out of the SXEW, which I spoke about. Got our own concrete batching plant, which is important on the refurbishment process because it de-risks that concrete side of it. All the water we want, the underground we're flooding, so that's a water source. So all those things adding up to give the project more robustness. Just a bit again about the restart. C1 cash cost $1.91, in the restart study 282, but that was at a 75-cent copper price. If you apply, 75-cent Aussie dollar, if you apply a lower Aussie dollar, then it drops because most of the costs are in Aussie dollar, which is what currently is happening at the moment. So the C3 or all-in sustain is a lot cheaper. Remembering that copper price is about $4.20 at the moment, so it's about $1.40 margin, $1.20, $1.40 margin on top of all-in sustaining. So pretty robust project. As I said, there's a lot of things we could have done, but we haven't done because it's already robust enough. And if you recall, is when we did that restart study, we published it March, April of last year. And this is key at the moment when we talk about cost influences, because what we're seeing is diesel prices come off since then. Freight's dropped significantly. If those of you recall, the freight prices were through the roof with diesel. Our gas prices remain stable because it's domestic gas from Western Australia and there's that reservation policy. So that's remained reasonably stable, which is great. The labour market to us is easing, and there's quite a few projects that are coming through a commissioning process, which means construction labour should start to be laid off. And quite frankly, through the process where we've employed 100 people and then we laid them off late last year, we really haven't struggled with labour. Couple of positions, I think at one stage in the early times we were struggling with electricians, but we overcame that. So we're not seeing the same labour stretch that probably other companies are seeing, although I noticed some of the big companies like South32, Evolution, and those companies have said they're seeing it easing as well. And we're on their side of the fence because we see it easing. But we're finding that people want to come and work for us as a smaller company, and the maximum workforce after in full operations only about 300 anyway. So we're not seeing those same labour issues that we probably saw at the start of last year. As I said, diesel's coming off, freight's coming off. We've seen some reagents coming off like acid. From our point of view, acid coming off. Yeah, so in terms of the restart study, it still remains robust, and we think that the way things are looking, it's becoming more robust. But again, better to be conservative and leave it as it is, because we know during refurbishments and construction periods, there's always swings and roundabouts that we need to deal with. So, you know, you're one hand to the other. And remembering that it's a refurbishment, and that's key, it's brownfield. So there's no major structural steel or things like that, or 14-metre long SAG mills or huge dry ivory crushers. Most of the stuff's mid-range, smaller stuff. So we don't have those same stresses that larger projects, you know, that are spending $1 billion worth of capital might have. A little bit about what we did at Wetar, so I won't go into too much, but just to bring into the capital cost, just to refresh everyone, about 150 million with the contingency, most of it in the agglomeration heap leach because of the construction of those new pads I pointed out, and not a lot in the solvent extraction, electrowinning and process general because it's refurb, tanks, pipes and pumps. You can see 12-month period from the time we start, which is important, and that's the refurb. And maximum cash drawdown was 200 million as we put into the restart study. So now, important thing, the finance. What we're doing at the moment, we're going through the process for senior secured bonds for USD 140 million. And what that means is that we make a lot of meetings with interested parties, and they basically make offers into that bond, and we're right in that process right now. At the moment, it's a 5-year blonde, and the project completion is about 2,000 tonnes of copper cathode, including commissioning, which is quite good. So that process will go right through to February, and it'll be all finalised by the end of February. And the cap raise that we've just done is conditional on that, and that is conditional to the end of February as well. So what we've done there is when you go through these processes, the equity holder is there saying, where's the debt? And the debt holder's there saying, where's the equity? So one of the ways to overcome some of that issues is to get the equity conditional, which we've done, and then the bond holder or the bond bidder, if you like, knows the equity's there, so he's more confident. So in our discussions with the senior debt guys, it's one issue that we don't have to discuss. So that's why we've done it like we've done it. And this allows us to work through this bond process and get that put away by the end of February now, which is good. And as I keep saying, for us, it's just another step. Everything's a step forward to go to that strategy. Sometimes it's quick and hacky, and other times there's a bit of a grind, but we just got to do what we've got to do, and that's what we're doing. Prepayment facility, which we announced on the 21st of December with Transmine. We're pretty happy with that. It's very good. Transmine was one of the favourite parties, and we're really glad to get into an arrangement with them. So that's $35 million. SOFR is like LIBOR. It's like a bank lending rate. So you can see the terms and the rates there. The repayment rate for the shipments of cathode and the amount of cathode. So you note the 140,000 tonnes of cathode matches up to the 146,100 in the restart study. So that's all phase one. We get copper price, which is normal for cathode, plus we get to share in premium. And for those who I've talked to before, premium fluctuates up and down, but the range in recent times has been quite good, and we don't include premium in any of our models. It's basically that bit on top that we like. Importantly, for all of this, document generation is complete. And for those who know, we had a couple of sort of false starts on finance, because when we published the restart study, the whole market just went through the floor, if you'll recall. So we had a couple of false starts, and basically this time we really wanted the documentation complete. We wanted due diligence complete, and basically got all of that gathered up, ready to go, and then the prepayment was done, and then we move into the senior secured bond. And what that allows us to do is to create a specific data room for the senior secured bond guys to go in, one-stop shop, do the due diligence that they need and move on quickly. So that really has got everything right and ready to go. And importantly about the debt, because we always ask, is it enough? Is it enough? This debt is quite solid. If you recall, I said that we had 200 million Aussie maximum cash drawdown. If you have a look at this debt at the moment, we've got about 250 Aussie. So you say, well, what's the other 50? Which is a perfectly logical question. Well, this is what it is. There's the US 9 million in contingency. There's US 10 million cost overrun. And there's US 14 million in a minimum liquidity account. So that's all the extra on top of what you require to protect you against any cost blowouts that you might see. But as I said, the issue that we sort of have is that the costs when we did this were out of control in that inflationary environment of 2022. And now they seem to have, to us anyway, have come back to the field a bit. So we've got what we think is a conservative model. But you can never be too careful. So, on one hand, we're required to loan more money for that contingency cost overrun minimum liquidity, but on the other hand, it protects us to make sure we get the job done and we start to play copper and make money. And just to demonstrate that, as I've said in this slide, the finance-based case is currently over $1,000 below Aussie dollar copper price. It was flexed up with 10% of the capital cost and 5% of the operating cost. And the model is conservative against that inflation environment of 2022. So that's really where we're moving forward with. Bit on the permits, approved, which is fantastic. Great job by the team, one and all, and great job by the government departments, actually. It was pretty good process in the end. Really happy with the outcome. So we could actually start work on the disturbed areas today, right now. In fact, yesterday or the day before. The only other proposal that we need is a state agreement proposal, because as you're aware, Nifty's on a state agreement act of parliament, and any modification, expansion or vary the activities requires another approval. But it's about adhering to the conditions of the state agreement. And one of those is finance. So we have to be financed. When that approval is given, we have to start work. We can't then say, oh, we're going to delay for 12 months, because once that approval is given by the minister, we've got to start work. So notwithstanding that we can start work on the disturbed areas right now, we need that to basically final one to start to do everything that we need to do. So that's pretty good. So just on the timeline, we complete the finance February. We're already operationally ready. So March, we order long lead items, which is only 4 packages, and they're not major. So it's anodes, cathodes, filters at the front of the ASX, cathode stripping machine, and rectiformers. They're all under 6 months delivery, and they're not major, squillion-dollar packages. So we make those orders. We finalise the tenders on the packages, because, as I said, it's like pumps, pipes, and tanks. So there's these smaller packages around. Finalise tenders with contractors and things like that. Start to recruit our own people, because remember, we wound back in September, October. And then we look to hit the ground, digging dirt 1st of April, which means 1st of April 2024, we're in full production, because we can commission through January, February, March. And again, one of the important things about that, if just take us back to this slide, is this pipe with the blue water is basically solution inventory that we can start commissioning with. So we're really lucky in that respect. So this heap leach, every time it rains, that's what it produces. And that's why the team's been cleaning out those solution ponds, because they want to store this, obviously, because then we can feed it into the SXEW and plate copper. I mean, just for everyone's, the last sample I saw, that goes about 13 grams a litre copper. Feed into the treatment plant's about 3. So pretty good quality solution. And as I said, it sort of helps us with commissioning, because we've got a solution inventory. So the way we commission is we build up a heap leach inventory, which leads to a solution inventory. So very, very handy for us. And that really sort of brings us up to date about where we are. So I'm happy now to take some questions.
Thank you, Barry. And we encourage shareholders to use the Q&A function at the bottom of the screen should you have any further questions. But I will jump into it because we had a few come through so far. So are you able to give guidance on the status of the outstanding convertible notes, assuming that the Nifty restart package is completed?
Yeah, so the convertible notes are still the same, the interest payment in March and 2 and a bit odd years before repayment. They've been included in the full financial base case model, and we are going to progress and pay them off at whatever time is required under those agreements. So yeah, they're part of the model.
Thank you for that. And can you shed some light on the lending side's mindset when it comes to a loan facility?
Meeting's been pretty good with the debt guys. So the debt guys do a lot more intensive due diligence. So they're actually quite knowledgeable. Because a lot of them are outside of Australia, they actually know a bit more about heap leach. So some of the technical questions have been good. Really challenging, actually, which I prefer, because as you know, I could speak heap leach and chemistry till I go blue in the face. But I've had some really good engagements in that regard, and we've had some good early indications from it. But yeah, very, very different to sort of equity. They are really focused in on that life where the debt repayment happens, and that's why it's good that we got that advice from our advisors and built that data room, because it answers most of their questions.
Thank you, Barry. Another one. So what is the interest rate on the bond, and are there any penalties associated with an early payout?
Basically, that's still being developed because we're in this process. So we'll know what final indications are. It's almost like a competitive process. At this stage, under the docs, is an early repayment after 30 months.
Perfect. This one's come through a few times, just with offering shareholders the ability to buy. I'm assuming it's against the cap raise.
Yeah, under the cap raise scenario, it was very, very difficult to actually do So we couldn't do an entitlement issue because you have to wait 12 months, and we'd already done one of those. We couldn't do an SPP because it's very difficult to do under the conditions that we had. So unfortunately, we couldn't do that. Quite frankly, it's actually cut quite a few of our managers out of participating as well, because they're not sophisticated investors, so they have to rely on something like an SPP. So unfortunately, we couldn't do it. Probably would have loved to, but we actually couldn't. Sorry to say.
Just on the cap raise, so what portions of the directors participated?
Basically, one director participated. A few of us were unable to, and the same with management. As I said, on the basis that there was no SPP, it sort of cut a few of us out.
Thank you, Barry. Just one to cash burn. So cash burn was 25 mil in the last 6 months on staff and admin. What is management doing to address this?
We've already done it. We laid off over 60 people, as you're well aware, in the last quarter last year. So the reason why the cash burn was so high in that quarter is we paid everyone out, which we knew and we're fully aware of. So the cash burn's been coming down all the time. And we announced that and said that we were going to lay people off. We were quite firm on that. And unfortunately, we had to and laid off a lot of good people, but, that's what you need to protect your cash burn. That's what we did. So, we anticipate that in the March quarterly that the cash burn will be down, but then again, it'll start to increase once we're financed, because we'll go back up to full production. Oh, and the senior guys that stayed went on reduced salary too, by the way, including myself. So, if you want to question our commitment, there you go.
Thank you, Barry. So what measures has the company taken to ensure the project will be delivered on budget?
Well, I just went through that, like the conservatism in the model and the conservatism in that capital and the debt is what protects us against that budgeting process, even though we're reasonably confident. But as I said, it swings and roundabouts. You're in a build process, so you basically get as much as you think you need, plus a bit more, and that's what we've done. And then we just got to smack into it and make it happen now. Well, once we get that senior debt put away, I should say.
Okay, and just on that, so how quickly would you envisage the final investment decision being made after finance is complete and the mine is fully funded? We'll
have a call same day. Like lightning. This is what we do. Like we're not financiers. We're not promoters and spraying holes out in the desert looking for lithium. We're just copper builders and producers, and step by step we're climbing over obstacles to actually go and refurb and build this thing. As soon as we can, it'll be FID and we'll be away. And hopefully that's sooner rather than later.
Thank you, Barry. So another one, how long would you envisage the state agreement and additional approvals take to be granted once allied for?
Generally, that'll take about 2 months. So the first month is to do a draft so that they can comment on it and send it back, and then you send it through and the minister gets his 30 days, but you've sort of pre-done that. I've already engaged with the guys in the state development. They've been really good. They've come back to me with a few things, so I'm just waiting on a few things, and then we'll start the notice in that process. But remembering, I can't really hit the button on it until the finance is done. But yeah, we're working on it now, so let's say 2 months.
Thank you, Barry. Another one. So has the ASX EW processing technology been completely locked in so that won't need to be modified at a greater cost later?
The ASX EW is, there's not a lot of new technology. It's the reason why we've got anodes and cathodes, because there's modification to the cathodes, modification to the anodes, and we're going for bigger anodes and cathodes. Rectiformer, new rectiformer, obviously. There's some other modifications around the plant, but they're not major. I mean, SXEW is basically a big, like, copper plating battery. So there's little things that can be done, but nothing huge. So we've covered off on that. And as we say, like, we've done the same thing with the same plant at Wetar in Eastern Indonesia. So it's exactly the same plant. We upgraded and refurbished that. Learn a lot about what needs to be done. So we've brought that knowledge with us, and we've got it first shot this time. And remember that it's already had this previous life. And we've actually got people in our workforce who were there in the previous life, and they sort of understand the hiccups that they had with different parts of the SXEW, and we've already allowed for that into the refurb and the build of the bits that we have to rebuild.
Thank you, Barry. Jumping around a little bit here, but will you be leaving further column tests on the sulfides until well down the track, or will you be doing them sooner?
No, we'll do them as soon as we can. And the reason for that is we want to sort the life of mine out. So as you know, everyone understands, the life of mine, the 20 years plus, is what the equity guy is looking at. So we want to sort that out as soon as possible. In the actual restart study, there's actually sulfide mined at the end or towards the end, which is actually stockpiled, not dealt with. So we've actually got sulfide coming at the end of 6.5 years. So we really need to sort that out. We really need to understand what our life of mine's doing, and then we can plan for the life of mine, and we can take whatever steps we need to make that happen. So that has to happen sooner rather than later. And you know, part of what the capital raise does allow us to do a bit of that. And we don't think we have to do much. But you know, previously we just stopped everything while we went through this finance process. So you know, we just need to get back on that horse and ride it home.
Thank you, Barry. Another one's popped up. So what are the biggest risks to restart timeline?
Well, it's a step-by-step process. So at the moment, the biggest risk at the moment is getting the finance finished, because until you sign on the dotted line, if the market did something today, you're waiting on the market again, and that's been the issue. I don't want to make it sound like, you know, we've had a hard run or anything, but the market has been difficult in terms of getting this away. Certainly in the last couple of weeks, it's been a lot more encouraging, but the market is still difficult. And, you know, we've just got to keep going, get that signed away, then we'll move on to the next potential speed hump. So that'll be, you know, you actually go and place orders for long lead items. Is the 10-week delivery really 10 weeks, or is it 14 weeks? Then, you know, go and get your tenders done and go through all that. So there's this process that we just got to go through. And most of these processes don't happen until you got money, because people want to get paid. They want to deposit on a PO and all that sort of stuff. So it's just a normal process. We sort of, sometimes we sort of sit there and, you know, ask these questions, but that's just a normal process in mining and the resources industry, is that step by step we go through these things, and there's always risk. There's always risk. There's risk when you walk out your front door that you might get run over by a bus, right? So in the mining industry, there's always risk, and we just manage that risk as best we can. And all I can say is all of those risks, we manage them as best we can, and that's all we can do.
Thank you, Barry. That's all we actually have time for today. Should shareholders have further questions, please feel free to be in touch via the contact details on our website. But I want to thank you all for joining us.
Thanks, everyone.